One morning, the world wakes up, and breaking news starts spreading everywhere. Tension between Iran and Israel has suddenly escalated. Missiles, military alert, and rising fear in the Middle East. But something strange happens immediately after this news hits the global markets. Stock markets start falling, oil prices suddenly jump, and gold begins to rise. But why does war affect gold and oil so much? To understand this, we need to look at how investors think. Before the tension started, oil prices were trading around $72 per barrel. But as soon as the conflict risk increased, oil prices quickly jumped close to $80 per barrel. And analysts say, if the situation gets worse, oil could even reach $100 per barrel. But oil is not the only thing reacting. Gold is also moving fast. Before the conflict, gold was trading around $2,300 per ounce. But as geopolitical tension increased, gold moved higher toward $2,400 per ounce. But why does gold rise during wars? The answer is simple: fear. Whenever the world becomes uncertain, investors pull their money out of risky assets like stocks, and they move their money into safe assets. And for centuries, the most trusted, safe asset in the world has been gold. That is why whenever there is war, crises, or global uncertainty, gold demand increases, but oil reacts for a completely different reason. The Middle East is one of the most important oil regions in the world, and there is a small but extremely important route called the Strait of Hormuz. Almost 20% of the world's oil supply passes through this narrow sea route. If war or conflict disrupts this route, the global oil supply can be affected, and when supply becomes uncertain, prices rise very quickly. This is why traders and investors rush to buy oil when tensions rise in that region. But the impact does not stop there. When oil becomes expensive, transportation becomes expensive, shipping becomes expensive, and eventually, everything becomes more expensive, which leads to global inflation. So a conflict between two countries can affect the entire world economy. But smart investors look at this situation differently. They do not panic. They understand patterns. If you study history, you will notice that gold often performs strongly during geopolitical crises. That is why many experienced investors always keep a portion of their portfolio in gold. It acts as protection during uncertain times. And this is the kind of financial knowledge that most schools never teach. A degree is important, but learning financial skills is even more important, because understanding money and markets can completely change how you see the world. If you enjoy simple financial stories like this, subscribe to the channel, because here we turn global news into simple money lessons.